Hello, I'm Eknath Ghodke. I have presentation of working capital. What is working capital? Working capital, also known as net working capital, is the difference between company current asset, accounts receivable, customer, unpaid bills, investors of raw material and finished goods, and its current liabilities such accounts payable and debts. Working capital is a measure of a company liquidity, of operational efficiency, and short-term financial health. If a company has a sustainable positive working capital, then it should have the potential to invest and grow. If a company current asset do not exceed the its current liabilities, then it may have trouble growing or paying back creditors or even go bankrupt. Key takeaways: working capital, net working capital represent the different bin company current asset and current liability. Net working capital is a measure of a company liquidity and short-term financial health. A company has a negative working capital if its ratio of current asset and liabilities is less than 1. Positive working capital indicate that a company can fund its current operation and invest in future activities and growth. High working capital isn't always a good thing. It might indicate that the business has too much inventory or not investing excess cash. Understanding working capital estimate derived from the array of asset and liabilities or corporate balance sheet. Current asset and listed include cash, accounts receivable, inventory, and other asset that exceed to the liquidate to turn into cash in less than 1 year. To calculate working capital, compare the former to the latter. Specifically, subtract one or one from the other. A company has negative working capital its if its ratio of current asset and liabilities is less than 1. Positive working capital indicate that a company can fund its current operation and invest in future activities and growth. Working capital is the line with higher than one industry average. For a company comparable size is generally considered acceptable. Low working capital may indicate a risk, distress, or default. How to calculate working capital? Working capital is calculated by taking a company current asset and deducting current liabilities. For the instance of company has current asset $1 lakh and current liability $80,000, then working capital should be $20,000. Common example of a current asset and include cash, accounts receivable, and inventory. Example of current liability include accounts payable, short-term debts, payments, and the current portion to defer revenue. Thank you.